Welcome to Alpha Recap, your after-hours breakdown from stockalpha.ai. We're coming to you after the bell with the biggest themes we saw today. As always, if you have questions, you can reach us at stockalpha.ai and use the Q&A feature to ask us directly.
Hey everyone, glad you tuned in. Big day out of Los Angeles at the Optical Fiber Communications Conference, and it really moved markets after hours. Markets closed mixed as investors parsed sector news and macro crosswinds.
So, what really stands out here is that OFC felt like a tipping point. Not just a product showcase, but a sector repricing.
Right. We saw some heavy signals. 2 Photonics names were added to the S&P 500. Another company issued what analysts called billion-dollar guidance, and a smaller player rolled out a second-generation external light source demo. Those together sent a clear message.
Hold on, say that again. Additions to the S&P, big guidance, and a demo? That's a lot. Which parts drove the reaction?
The S&P inclusions are important because index flows follow those moves. The big guidance, about $1 billion from Applied Optoelectronics, added revenue credibility, and the demo from Poet showed real engineering progress on the optical interconnect side.
And the demo? That was a compact external light source with 8 high-power lasers and wavelength division multiplexing. That means multiple data streams over a single fiber, which matters at larger scales.
Exactly. In plain terms, when data centers push into 800 gigabit links and beyond, copper and traditional electrical connections start hitting limits on bandwidth and heat. Optical solutions can carry more data with less energy per bit. I mean, when you step back and look at this, that's an architectural shift.
So this is what analysts were calling an optical supercycle. Capital spending that's not just bumping up a little, but could be multi-year and big.
Some analysts think OFC signaled immediate repricing. Others caution it's more lumpy because supply chains and CapEx schedules will stretch the realization over a few quarters. Timing is the debate.
Short reaction.
Big move.
Let's make this simple for listeners who aren't hardware nerds. Imagine trying to push a fire hose of data through a garden hose. Copper is the garden hose. You can only make it so wide before it gets hot and heavy. Fiber is the bigger, cooler pipe. Optical interconnects let you push more without melting things down.
Nice analogy. And to add to that, wavelength division multiplexing is like running multiple colored threads down the same fiber. Each color carries its own stream, so a single fiber can behave like multiple pipes at once.
Yeah, that tracks.
Love that. And investors hear architectural shift, and they start to reallocate CapEx expectations. That's where the supercycle talk comes from.
Now, before we leave Photonics, a quick practical point. Even though the tech looks promising, execution risk is real. Supply chain constraints, lead times, and the capital intensity of integrating systems can stretch timelines. And not every company will grab the upside.
Right. Watch gross margins, backlog, and transceiver average selling prices as leading indicators. If those move up consistently, the repricing is getting backed by revenue.
Switching gears, there was another big structural story in the brief. H.R. 7987. A proposed bill that could create a federal safe harbor for exchange listings of cannabis businesses.
This one could be a real catalyst if it passes. Analysts say uplisting to U.S. exchanges and clearing prime broker custody could unlock institutional pools that have been sidelined since custody restrictions tightened in 2021. That could be a multi-billion-dollar re-rating for some multi-state operators.
But of course, skeptics point out that even with a legal safe harbor, exchanges have their own listing standards. Companies need audited financials, stronger governance, and time to meet those bars. So it's not an instant flood of money.
Exactly. Legislative change is a necessary condition, but not sufficient. The sequence analysts flagged was legal safe harbor, then listings, then institutional custody, then capital flows. Each step takes time.
Short reaction.
Timing matters a lot.
Let's bring the macro into this. The morning brief noted rate cut hopes remain alive, which kept risk appetite on a hair trigger heading into earnings from several big companies. But JPMorgan warned markets might be complacent about the Iran war and potential oil shocks.
That's the crosswind. If oil spikes, margins compress for cyclical businesses, and the growth narrative gets harder to sustain. So you could have a technology-driven reallocation toward photonics at the same time that an energy shock pushes risk sentiment the other way.
I mean, when you step back and look at this, that tug of war is central. Easing expectations versus real commodity risk. Traders were positioned for looser policy, but geopolitics could change that fast.
And that's why analysts differ. Some think the photonics story will dominate and be priced in quickly. Others see macro risk as the limiter. If oil rises sharply, capital spending plans could be delayed or downgraded.
Quick aside on filings. Several companies filed 8K reports today. Most routine, but a few contained asset transactions or operational updates. If you follow any of those names, it's worth reading the exhibits rather than relying on headlines.
Short reaction.
Good point.
Let's walk through what this means for different investor types. High level, informational only.
Thematic and long-term growth investors. The optical supercycle thesis strengthens the case for exposure across the photonics supply chain. Lasers, transceivers, packaging, testing, and system integration. Analysts suggest monitoring hyperscaler CapEx as an early signal.
Event and momentum traders. OFC gave near-term volatility windows. Earnings from big names and any progress on the uplisting bill could trigger sharp moves, especially for smaller, over-the-counter listed cannabis firms.
Income and value investors should watch JPMorgan's energy risk note. If oil moves materially higher, dividend payers and REITs with energy-sensitive cost structures could see pressure.
Fixed income and macro allocators. The interplay between rate cut hopes and commodity shocks complicates duration and reinvestment calculations. Analysts emphasized watching oil forward curves and Fed communications in real time.
Remember, this is analysis and context, not buy or sell advice. Analysts note potential catalysts and risks. This is informational only and not personalized investment advice.
Totally. Okay, let's summarize our key takeaways so listeners can walk away with a few clear bullets.
Key takeaway 1. OFC crystallized an optical supercycle narrative. Investors are beginning to price a multi-year capital cycle in photonics as hyperscalers push past electrical interconnect limits.
Key takeaway 2. The uplisting bill could unlock institutional capital for U.S. cannabis companies, but passage and corporate readiness matter. This is a process, not an instant fix.
Key takeaway 3. Macro crosswinds are meaningful. Rate cut hopes and geopolitical oil risk are pushing in opposite directions, so watch energy signals and Fed commentary closely.
And a practical fourth, for anyone watching this space, track leading indicators. Hyperscaler CapEx, transceiver ASPs and backlogs, legislative progress, and 8K exhibits. Those will tell you whether headlines turn into durable revenue.
Honestly, I was a bit surprised by how coordinated the messaging felt at OFC. When corporate signals like index inclusions and billion-dollar guidance line up with engineering demos, markets tend to take notice.
Yeah, but stay vigilant. Execution and macro risk can still change the story, so watch the data and filings.
Final, quick reactions.
Lots to watch.
Thanks for listening to Alpha Recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
See you next time, and don't forget, this is informational only. Analysts note trends and risks. This isn't specific investment advice. Reach us at stockalpha.ai with your questions.